So you may have seen or been offered something called a loan modification by the servicer of your current mortgage. And it may look enticing. Maybe they're going to lower your interest rate or lower your payment. But I'll tell you, there are some huge pitfalls that you need to be careful about when looking at doing a loan modification. In today's training, I'm going to break it all down for you. Hi, it's Robert Weinberg, and on this channel we empower individuals to take control of their future through expert mortgage and financial strategies. If you're new to the channel, go ahead and hit the subscribe button and also click the bell so you get notified on any or all of our future content. In today's training, I want to talk about hidden pitfalls of loan modifications. So you may have seen these and thought it sounded like a good idea, but these are really most appropriate for people who are behind on their mortgage or in a situation where they could go behind. So the most applicable scenarios are if you had a job loss and that's caused you to go behind on your mortgage, if you had a medical emergency, or in cases of a natural disaster like a hurricane or tornado. Many times a loan modification will be an appropriate product that would be offered to you with those situations to help out with your mortgage payments and your specific situation. Now, one of the big pitfalls that I've seen with loan modifications is sometimes you'll see your payment will only go down maybe $20 or $30 or $50 a month. And for many people, that's okay, but that doesn't really solve the problem. So the number one pitfall you want to be careful of is making sure that there's a big benefit when you're going to go through doing one of these loan modifications. If it's only saving you a very small amount of money per month and it's not actually solving the problem that got you into an issue with your mortgage, then you don't want to proceed with that loan modification. Now, unfortunately, what I've found is many people who do these loan modifications, they don't really pay a lot of attention. They just figure, hey, I'm getting a reduction in my payment. Sounds good. It doesn't cost me anything. Let's go ahead and sign on the dotted line. And they just go forward with it. They don't really read anything. What they come to find is when they come to an advisor like myself looking to refinance or purchase another property, what they realize is that the reason that their payment goes down even a small amount is because the mortgage company actually took their mortgage and took it from a 20 or 30-year mortgage and stretched it out to a 40-year or even a 50-year mortgage. And they're blindsided. If they would have known this, they tell me that they would have not proceeded, because many times, like I said, there's a very small benefit to doing this, and you're adding many years to the term of your mortgage. So you really want to be careful exactly how are they giving you a benefit on a loan modification, and if it's stretching your loan out for these huge amounts of time, then it may not be a good idea to proceed. Now, one of the reasons why a loan modification is really not a good idea for most people is because it only will reduce the payment on your mortgage and or interest rate on your mortgage. It doesn't allow you to take any cash out of your equity of your home. It doesn't allow you to consolidate any of your debt. And for a lot of my clients, that's really the main driving factor, is that they've got equity here that they want to be able to utilize, whether it's cashing out for a college education, a trip, or consolidating debt. So a loan modification doesn't really allow you to do any of those things. So for that reason, a refinance might be actually a better solution to that issue. Now, another thing about a loan modification that you want to be careful of is a principal reduction. Now, a lot of the time this will be offered if your mortgage balance is higher than the value of or current value of your home. So for example, if you owe $150,000 but your current home market value is only $120,000, they may be willing to negotiate and reduce that principal amount down so you don't owe more on the house than it's worth. But you really want to be careful about this, because while it may sound okay, it can make it very difficult to refinance in the future. So if they reduce the principal on your loan, for most underwriting programs that I've seen before and dealt with my clients, there's typically a 3-year waiting period if they reduce the principal on your loan modification before you'll be eligible to refinance your property. So just know that going in, if they're going to do a principal reduction, that you're going to have a waiting period. You can't just get that reduction done and then maybe 6 months or a year later say, oh, I'm just going to go and do a cash out refinance and pull some of that equity out of my property, if you have equity at that point. So be very careful with that. Another thing that is a huge downfall and pitfall of these loan modifications, and most people aren't even aware about, is a principal increase. So normally when they do these, they make it seem like it's not costing you anything. But when you really get down to the fine print, there's two different scenarios that I've seen. First of all, I've seen where they'll add on anywhere from $10,000 to $100,000 onto the principal of your mortgage. And this is money that you may not see there, but it will come up to bite you when you go to either sell or refinance your home. This money does have to be paid back. So even though it's not coming out of your pocket directly at that time of the modification, it is coming out indirectly either when you refinance or sell your property. It has to be paid. And I've seen a lot of people that had no idea about this. They go to refinance, they think they have equity, and then we pull a title search and it shows that they've got this extra amount on their mortgage and or a second lien on their property. So sometimes they won't even put it on your first mortgage. They'll actually create an entirely new mortgage that you may not even be aware of that they put on the title of your home that has to be paid when, like I said, you either refinance or sell your property. Now, just a side note, if they add the money to the principal balance of your first mortgage, it's usually called a deferred principal balance. It does not typically accrue interest, so that's why you may not know about it, because there's no payment that's actually due on that extra amount, and you won't even find out until your mortgage lender goes to pull a payoff statement to pay that loan off, and there'll be an extra line item on there. I've seen it shown in different ways, and it'll be for tens of thousands of extra dollars that you may not even know that you owe. So you really want to be careful to read the fine print, because what my experience has been is people that do these modifications, they just look good, they sound good, and they figure, hey, it's not going to cost me anything, let me just go ahead and sign it and do it. What do I have to lose? But unfortunately, you need to really be careful about reading the fine print, because even these clients who told me they didn't know about it, when we go back and look at the documents, they signed documents and they did know about it. They may have forgotten about it, or they may not have been actually told about it by their loan officer or whoever handled the mortgage modification, but they did know about it, evidenced by the signature on the documentation. So in many cases, it really makes a lot more sense to do a refinance of your property than it does for loan modifications. What situation does a modification make sense? If you legitimately have a hardship and you're behind on your mortgage a couple months and you're trying to keep your home, that's where a modification can make sense, because a refinance is typically not going to be an option if you're behind on your loan. Anything else than those hardship scenarios is going to be a definite situation where you want to get with a local mortgage advisor, get with a mortgage expert that can really look at your scenario and structure the proper mortgage based on your goals and your particular financial circumstance. So I hope that this has been of value to you and really opened up your eyes about these pitfalls of loan modifications. I hope you'll share this with others that may benefit from it, and I hope you'll also leave your comment below. Appreciate you watching today, and please follow me on my channels on social media. Reach out to me by call or text, or private message me directly if I can be of assistance to you or anyone you know. Take care.